What is the future of the AI trade, and how are you playing it next year? Art, is it Mag 7 or bust for you?
It's not, and I'll tell you this, I think this was the year after 3 years of AI being rolled out and the revolution starting, where investors clearly had to start to differentiate. And the differentiation point really came to the fact that if you're spending massive amounts of money on CapEx to build out your large language model, that's fine if it's coming from free cash flow. If you're putting a lot of debt out there, your return on invested capital is starting to be called into question, and rightly so. We know there's 6 large language models being developed right now. We know there's not going to be 6 at the end of this revolution or at the end of the rainbow here. So the winners will have to be picked, and largely right now that's happening in a form of how much debt are you laying out to make this happen, and how long is it going to take to return that investment. So I agree with one of the hits that you just put on, and I think Google is in the lead. It goes back and forth between ChatGPT 4.0 and OpenAI. We really don't know if they'll ever come public, so that's not an investment opportunity. But where you want to be careful is in those names that continue to lay out debt. Companies like CoreWeave and Oracle clearly have been the poster child of you're spending too much money. We don't think you're going to get it back.
Are you unsettled by the valuations on some of these AI names?
Well, let's look at NVIDIA trading at 24 times next year's earnings. They've laid out what the demand is for the Blackwell, and they'll have another offering by the middle of next year. So clearly, they are at the tip of the sword of where the CapEx is going, and they're profiting from it in the here and now. So there's no question about their return on invested capital. So in that case, I'm not whatsoever concerned. Alphabet's trading at a reasonable multiple, 33 times forward, continues to have strong free cash flows, and all the concerns that we had about their relationship with with Apple. Now they're going to be a partner with Apple with Gemini, so that's going to be where your smart Apple Intelligence comes from. So yeah, and those two names, no. I think when you move down the ladder and look at some of the names like Meta, Tesla, I don't throw into that basket because it's not exactly an artificial intelligence play.
We're still trying to figure out what Tesla is at this point, Art. You're not alone.
Yeah, I still, you know what? I think they're trying to figure it out too. It's always about the future and what they're able to deliver. But I think the sneakiest of the AI plays is Apple, and continues to be. Everyone said they had no AI strategy. All of a sudden, they've delivered that. They've been blowout returns for the iPhone 17, and they're going to buy it. They're not going to build it. So, they're going to partner with Alphabet here, then somebody else internationally, and clearly they'll be the winner. And that's how we'll likely consume artificial intelligence next year.
And as Art makes some really good points here, I am with him that 24 times forward earnings on NVIDIA is not stupid silly, and neither is 33 times on Alphabet when you have just dropped I would say, the best model, large language model, on the heads of everybody.
And those are clearly winners when Wall Street is taking a look at winners and losers. Look, Tom Essay's commentary was very on point. Nomura had also an analyst this week that was talking about breaking out the selective scalpel and basically the winners and losers that are emerging, and saying that that's actually a good thing. I mean, you saw Micron's earnings that kind of put the wheels back on the AI trade a bit after their earnings report. But Wall Street is seeing that, okay, maybe there is some scrutiny that we have to put on some of these companies, but that does not mean that the entire AI trade is over. That doesn't mean that it is a done deal as far as if there's jitters in the markets about the AI trade. You've got UBS that came out this week basically saying overall, the AI trade is still intact. They do not see an investment bubble.
And as I think it's also broadening out. In the last part of that montage we had there, that was Dave Bozeman, CEO of C.H. Robinson, a logistics company. And I spent almost 40 minutes with him listening on how AI is transforming his business. And he has more AI investments planned for next year, which might unlock even more profits. And he's taking this AI and implementing it because that means he doesn't need to add more costly workers. So what I was trying to get at the beginning was this trade is broadening out, and it's not just 7 stocks in it.
No, it's not. I mean, companies are using AI for productivity, and that's what is expected. It'll be interesting to see how that translates into the labor market. But yes, productivity is a major cornerstone of companies that are utilizing AI. And then you've got everything else that touches AI. Of course, we've talked about the electricity grid, the energy grid, all of the entire space that is going to be the energy demand that is going to be needed is really unprecedented, and that's why you're seeing so much money being poured into those sectors.
Or what does give me pause on the AI trade going into next year, there's no doubt that the growth rates are going to be hot. These companies are going to report earnings and they're going to be big, but will the growth rates be accelerating quarter over quarter? I mean, that's a key piece of context here to the story.
Yeah, certainly you fall into the law of large numbers, right? So look at the massive growth we've seen over the course of the last 3 years in NVIDIA. Of course, it's difficult for them to continue to have 50% earnings growth, 60% revenue growth, and still throw off margins that are north of 65%. So yeah, the larger you get, the more you're invested in this artificial intelligence revolution, the harder it is to continue to push that needle higher. But then at which, what multiple are you trading and how much of that is ascribed to your growth rate? So if you were to take a step back into another century and use a PEG ratio of both Alphabet and NVIDIA are trading at a PEG ratio of less than 1, which basically means they look very attractively valued and don't need that much more growth or multiple expansion to continue to work next year.
And if you are watching and wondering what a PEG ratio is, it is price to earnings growth. But Inez, I think you had a question for me.
Yeah, my question to you was, we talk a lot about affordability going into 2026. That is a cornerstone of the Trump administration and the K-shaped economy. And I guess my question is, how long do you think that this K-shaped economy can continue before it impacts the broader economy and earnings in the market?
Ooh, Inez, that's a really good question. I don't even think we're in a K-shaped economy. I think we're like one of those lines, and we're on the cusp of going right over into a V and then another line. So I don't even know what letter that is or shape that is. Maybe it's like a heartbeat, Inez. On a screen in a hospital and you see the heartbeat. Maybe we're in the heartbeat economy. I look at the dollar stores, Inez, and these companies have reported some really strong results. And you're not rocking right now if you're a Dollar Tree and Dollar General if the economy is rocking. These companies put up big quarters, the consumer's struggling, and it sounds like they're about ready to fall off a cliff. And it also sounds like every time they try to dip into their digital wallet, they don't have the money to go out there and spend even more, Inez.
Yeah, and I actually have another question too, is basically, is there a trade this year that you thought was really surprising to you?
We will end it on this. Meta. Meta shares only up about 13% year to date. And they've put up good results in Instagram, all the family of apps. Where I think the market is concerned, and this is some of the things that I think Art was talking about, it is the growth in CapEx. This year might spend about $73 billion. Next year, ramp that up to $100 billion. The market is concerned about the return on investment in AI for Meta. They don't see how it's going to fit into a business that is advertising-led. Good questions, Inez. Keep them coming. Art, good to see you. Happy holidays. Thanks for being a friend to Yahoo Finance all year. We appreciate it.